Hello guys, this is Mr. Senzi. I want to do the introduction of accounting. I'm sorry about the noises. Alright, I wanted us to look the most important basics and also as introduction for FAC 1501. Alright, but before we can move on, let us just start by defining the word or the concept of financial accounting or accounting itself. Accounting, we will start by introducing or defining this word. Accounting is a process of financial transaction pertaining to a business. Okay, that is whereby we are recording what the transactions. We are recording what the transactions of a certain business. Okay, that is accounting. And also accounting, it's having three types of activities that are included in accounting. The first activity of accounting is all about identification. Number two, recording. Number three, communication. Okay, so now we know that accounting is all about recording what a transactions of a certain business. Okay, now what is a transaction? Then now a transactions are the events occurred into the business where a buyer received what they received their goods or services. Okay, where buyers they receive their goods or services, and also money for those goods or services is paid by the customer. So whenever a transaction is occurring, it is whereby a customer is going to the business and request a certain service or goods in order to satisfy their needs, and then they're gonna pay money. So that particular event is called what? A transaction. It is an economical event actually. So okay, it is very important for us before we can understand accounting as a whole to understand firstly the terms or the concepts that are very important. So accounting is a process of recording what a transactions of a certain or pertaining of a business, or anyone who is intending to start a small business, even a big companies, they do record what? Transactions. So that is how we can define the term accounting. So the process of recording the financial transactions is done by a bookkeeping system. What? A bookkeeping what? System. Okay, bookkeeping system is the system that is used by the business to record what? All transactions that are occurred in the business, inside of the business. So that a bookkeeping what? System. Okay, let's move on by looking a few things as well, and then we done, we close in this lesson. As introduction, I want to tell you that for your assignment number one, there are three learning units that you need to master, that you need to know. All right, for assignment number one. Okay, assignment number one, you need to know what the introduction or what a definition of accounting concepts. Yeah, accounting concepts such as users of financial information, accounting, and also um, we talk of what types of financial statements of the business. We need to understand those things so that we can understand accounting as a whole. Number two, we need to understand what accounting equation. Accounting equation. So accounting equation, it must be include what the financial position of the business. Firstly, financial position of the business. Financial position of the business. Okay. The last one is the financial performance or the results of the business. At the end of the day, we need to record the transactions from general ledgers to these financial statements, which is a financial position of the business and also the financial performance of the business. Okay. Now, these learning units are the learning units that you need to understand before you can attempt your first assignment in this module. So, for us is to do things from these learning units, starting by understanding learning unit number one, understanding the types of users of financial information and explaining all types of what the financial statements of the business. Okay, okay, by doing accounting equation, we know that I will be introducing you in something that is called a accounting equation, which is assets equals to owners equity plus liabilities. So that is accounting equation. It is mathematical. So for you to understand everything in this learning unit number 2, actually it's learning unit number 2 and also 3. Remember, number 2 is all about a financial position of the business, and then number 3 is all about financial performance of the business. By going deep through this, guys, let's just do something as over interesting. Okay, if we're talking about the financial results or financial performance of the business, we calculating what the profit or loss of the business. So we are taking what incomes less expenses equals to profit or loss. Remember, when incomes are greater than expenses, a business automatically will make what a profit. But when expenses are greater than incomes, a business will make a loss. So by touching the financial results or a financial performance of the business, we speak of incomes and also expenses. So I will be telling you in our next coming lesson that incomes and expenses are belonging to what owners equity. Remember, owners equity are the interest of what of the owner, the interest of the owner. So whenever we are talking about owner's equity, we speak of interest of the owner. Remember, anyone who is intending to start a business, he or she must invest with their own money. You must take your money and invest into the business. At the end of the day, you will receive what? The interest. So the interest, it belongs to owner's equity. So also incomes. When a business is making income, remember in this module, it will introduce you to the business, which is there are four types. Actually, there are four types of owners equity. We have what? A sole proprietorship, and also partnership, um, close corporation, and also companies. But in this module, we will deal with a sole trader or a sole proprietorship, whereby there is one owner, and also the profit and loss, it belongs to one owner. All incomes, all expenses are belonging to one person, to one owner. Ne? Okay, so okay, that's why we are saying incomes and expenses, they belongs to what? Owner's equity. All right, I think everything is clear about this one. Okay, coming to the financial position of the business. Now, the financial position of the business, we talk of assets, owner's equity, and also liabilities. Yeah. Okay. Financial position. Okay. Now, financial position are all about assets equals to owner's equity plus liability. Yes. Assets equals to owner's equity plus liabilities. So we gonna talk more about types of assets, because under the types of assets we have what? A current assets. We have current assets and also a non-current assets. Okay, current assets as well as non-current assets. All right, let me leave it like this. We're going to talk about it in our next coming lesson. Okay, then owner's equity, I've told you that it is whereby we are looking for the interest of the owner, incomes and expenses. They all belong to what? To the owner's equity. As well as a liabilities, we have a current liability and also a non-current liabilities. Yeah, so that is how we can demonstrate, or we can describe the financial position of the business. So actually, I've introduced everything about a financial position. Remember, when we are calculating the financial position, we speak of assets equals to owner's equity plus liabilities. Assets are the positions, are the resources of the business. They use, all businesses, they use assets in order to generate what? The income. Owner's equity is the interest of the owner. Liabilities are the debts of the business. All right. Okay, the last one, guys, I want to introduce the business cycle. Let's see a business cycle, the last thing that I need to I need us to do. Okay, business cycle. Alright, I'm sorry for taking time in wiping all this. Okay, let's look at business cycle or accounting cycle. Yes, accounting cycle. Okay, accounting cycle. Now, accounting cycle is the summary of the whole accounting. Therefore, this is a summary, guys. So when we are talking about accounting, a financial accounting, you need to bear in mind that there is accounting cycle that explain everything that is occurring inside of what? Accounting. Remember, I've said accounting is the process of recording transactions of any business, or for anyone who is intending to start a small enterprise. So that person is responsible of recording what? Financial transactions, because at the end of the day, they are the economical events that will occur inside of that business. So accounting cycle first thing that we need to know is all about a transaction. Fortunately, now we spoke about a transaction. That what is a transaction actually? I've said to you is are the events that occurred into the business or inside of the business where money is received and also goods or services in return is obtained by what? By a buyer. Okay, now we start by a transaction. A transaction, from a transaction, we take the transaction and record it kulento esiyibiza ngokuthini ama-source documents. Okay, from the transactions to the source documents. Now source documents, they have provided as a proof that the transaction have been occurred, that the money have been received, that the money have been paid. If you have paid the money, you will receive what? A source document as a proof. If you have paid something or you have deposited a money into the bank account of the business, so a slip is printed for you as a proof of what? Of payment or a proof of deposit. So a source document is very, very important in the business. So the transaction is occurring and then you take the transaction straight to the source document. Right? Number 3, from a source document, and then we take the transaction and record it. Kulento esibiza kuthiwa yini? Ama journals. Yes, journals. You can say subsidiary journals. Okay, journals. What are the journals? Journals are the books of the business. These are the books of the business. Business use journals to record all transactions or all economical events inside of the business. So we have cash receipt journal and cash payment journal. Cash receipt journal and cash payment journal. Okay, these two are the two main journals. Okay, there is an inflow of money and also outflow of money. Okay, but in our upcoming lessons we're gonna talk more about journals. There are many types of journals. There are debtors journals, creditors journals, and also general journal, as well as credit allowances journal, debtors allowances journal. But in our upcoming lessons I will explain all journals as a book of a business or a books of a business that the business used to record all transactions. Okay, but for now let's only consider about these main two journals or the books of the business. Okay guys, we move on. Number 4, we speak of a general ledger. A general ledger. From a journals to the general ledger, it must be a T account. It is where we taught about lento esibiza kuthiwa i-double entry principle. Remember, a double entry principle, it is whereby every ledger or all accounts of the business are presented according to a T account. In a T account there are two sides. Okay, let me just little bit draw a T account here. There is a debit side and also a credit side, and then the account at the center. Okay, a general ledger is telling you that a certain account will increase on the debit side but decrease on a credit side. But we want to talk more about it in our upcoming lessons. I'm just introducing you to you what is happening inside of a general ledger. Okay, let's move on for now. Okay, now the last one. Fortunately, I've explained everything about it. Are the financial statements. Okay, now financial statements. I've told you that we have a financial position and also a financial performance. Financial position Assets equals to owner's equity plus liabilities. Financial performance, incomes less expenses equals to profit or a loss. Okay, ladies and gentlemen, this is what I wanted us to look as our introduction into this module. But I promise you, um, in our upcoming lessons, it's gonna be a productive lessons, and also I will be professional as much as I can. Yeah, everything will be done on time. But for now, let's just review everything about this one. Actually, I've summarized everything that we're gonna talk about in our upcoming lessons. So for now, let's just close here. Thank you so much.